I got 9 ways that you can immediately start to save money on that mortgage payment every single month that would save those thousands every single year. Hey guys, I'm Cedric with the SD Group Realtors, and today we have another video that basically affects all homeowners, and that is how to save money on your mortgage payment. So whether you guys just bought a house, you owned it for years, or y'all guys considering buying a house, one of the biggest things that we often talk about is our mortgage payments. If you don't understand how to control your mortgage payments, you can be leaving thousands on the table. And I'm not just talking about refinancing. Let's get into it. Hey guys, I got something for you real quick. If you haven't subscribed already, please do so. This is our channel. We're growing our real estate channel. This is where you come from for all your real estate needs and your questions, and anything that you want to think about real estate related is going to be on this channel. So if y'all guys could subscribe, like, and then share to those folks who you believe that can also benefit from this information as well. Now we get back to the video. So number one, refinance your home if it makes sense. And I want to capitalize if it makes sense. Everybody talks about refinancing, but it's more than one way to think about this. If you're going to drop your rate down a point, maybe a point and a half, maybe 2 points, that makes sense. You also need to plan on staying in this house long enough for it to make sense. If you plan on moving in a year or 2 years, maybe even 5 years, the cost of the refinance may not make enough sense to be able to do that. Last but not least, if you're removing your mortgage insurance, that makes sense because the mortgage insurance premium that they pay could be up to $200 a month, maybe even more depending on what size house you have. Here's a good example. If you have a 7% interest rate right now that you done bought in the last couple of years and you want to drop down to a 5.5, which some people have been doing recently, that can save you hundreds of dollars, which would make sense. But if the closing costs can be anywhere from $3,500 to about $5,000, maybe even more in some cases, and you plan on moving in 2 years, that doesn't make no sense. You always want to think about your break-even points when you're doing a refi because it's not free, it does cost money. So we want to think about those things first. So number 2 is removing your private mortgage insurance, PMI. For those of you guys that put down less than 20%, the odds of you having mortgage insurance still to this day is very high. Just like I said to you before, that can be anywhere from $150 to $400 a month in savings just by removing that one thing. So one of the things you can do if your home has appreciated over all the years, especially if you have owned your home for more than 5 years, it's a good odds that you have at least 20% equity built into your house at that moment. So step number 1 is to check with me about your home's value. Now you can live out of town, in town, no matter what town you live in. We can always look at how much equity you potentially have in your home. Step number 2 would be the removal of the mortgage insurance. So this step will have to do with you calling the actual mortgage company that you currently have and letting them know, like, I want to request a removal of the PMI off of my payments. And they will do their own investigation and look and see if you have at least 20% equity. So the third thing would be refinancing into a conventional loan. Now we talked about the refi on the first step. This kind of goes back into that step. So if refinancing makes sense and you wanted to go from an FHA to a conventional or a VA to a conventional, maybe it makes sense with the interest rate and removal of the mortgage insurance. That can potentially be up to $500 to $600 right there in savings. Or they may make you go up to the current interest rates now. So you have to weigh those options. So number 3, and this evolved with something that people may not know, and that is recasting your mortgage. This one is hidden that most people don't even know about. Here's what recasting means. If you want to make a large payment on your mortgage, so by calling your mortgage company, that can be instant savings without having to do a refi, and you'll still keep your current interest rate if that's what you want to do. So it's 2 ways to be able to look at this. If you want to keep your interest rate And if you don't want to keep your interest rate, if you have a higher interest rate, you want to go to a lower interest rate, refinancing is probably going to be the option. If you want to remove your mortgage insurance, then you will have to call the banks to do that, or you can do a refi. The lender then recalculates the mortgage payment, but your interest rate and your terms still stay the same. So if you have been paying on this mortgage for the last 5 years, instead of losing that 5 year period of time, you still keep the 5 years, plus you be able to drop the payment down based on the amount of money you put down. So here's an example. If you have $20,000 and you wanted to put it down on your mortgage payment, your monthly payment then drops without any refinancing fees. This is powerful because if you just get an inheritance or you just bought another house and you didn't sell your current home, and once you sell that current home, you have a bigger chunk of money because you obviously used us to help you sell. Or if you got a bonus at your job and you just wanted to put that money towards your house, this will work in all of those case scenarios. So number 4 is appealing your property taxes. Now, I know a lot of people don't think about this, but sometimes the county assess everybody their taxes. And if you read through the paperwork, you can always appeal those tax estimates. So here's a breakdown of what your mortgage payment includes. You have your principal, your interest, your property taxes, and your mortgage insurance. And you have regular insurance as well as homeowners insurance. So for some of us, our property taxes go up because they think that the values have risen based on the real estate sales in the neighborhood. When your property taxes go up, your payment goes up because that's what the offset is. Most homeowners never challenge the tax assessments done by the county. This is simple. If you feel like your home is overvalued by the county, you can appeal it. If you're able to save $100 a month, that's $1,200 a year just by filing the appeal to lower those taxes down. Number 5, if you have the space to do this and you have the means to do this, you can rent out a room in your house. House hacking is very, very powerful. And if you have a finished basement or extra bedroom, sometimes even with a separate entrance, this can help offset things $800 to maybe $1,200 a month. This can wipe out a good portion of your payment, especially when Minnesota have strong rental demands. Number 6 is switching to bi-weekly payments. Instead of making 12 payments per year, you can switch it to bi-weekly payments per month. You can make a half a payment every 2 weeks. So as crazy as it sounds, instead of making 12 payments a year, you just now made 13 payments per year. So as a result, you just saved down years off the mortgage, saving tens of thousands of dollars. So the big question is asking your lender, can you do that without paying any type of fees? So number 7 is shopping around for homeowners insurance. You probably should do this frequently. Insurance is also a part of the escrow alongside with the taxes. 2 things with the insurance. If you haven't shopped around in the last 2 years, you could be severely overpaying. And the second thing, especially with those that have their house for years, you can be undercovered, especially as time goes on and the cost of materials and labor has risen. You might not have enough coverage. So you definitely want to give your insurance agent a call, or you want to seek out some different coverages from other companies. So with that being said, call around, call at least 3 companies, shop the rates, compare coverages, see which one has a lower premium that you can afford or that you like. And what a lower premium means lowering the payments. And what that also means is now you're paying less per month. It's just that simple. So number 8 is modifying your loan. If you're currently behind and you're financially stressed, this is where you want to contact your lender early in the process. You don't want to let this linger around. You don't want more time to pass and you're not making payments. You want to call the lender early. Loan modifications, when done right, can lower your payments, can extend the terms. In some cases, they may let you take some of the missed payments and put them on the back end, which put you back current again, because a lot of these factors factor into your credit score and all of that. And so if you let this go by the wayside, your credit score can take a nosedive and you get further behind. So you want to catch this right when it starts happening. You definitely don't want to wait until a foreclosure notice comes to the house. So number 9 is for investors only, and this is doing a 1031 tax exchange. Let me explain. If you own an investment property, a 1031 tax exchange can do the following. It'll let you sell the current place, reinvest it into a new place, and push the capital gains down the road. This process will allow you to move up into a bigger cash flowing property instantly. You want to talk to your CPA before making these moves, but this would be a great opportunity for you to take a property that you have, that you want to get a bigger property, take the money out of that one, and go buy you another one that cash flow even more. I have a bonus for you guys, and this is going to be sell and reposition. Sometimes the best way to lower your mortgage is to restructure your life. Let me explain. You can sell your home in a high cost area. Maybe they have higher taxes or higher cost of living, then move to a lower cost area or downsize or relocate to a whole different area in general might save you a lot of money on that mortgage payment. So listen, most people just accept their mortgage payment to be what it is, but smart homeowners manage it. If you want a mortgage review, an equity analyst, or ways that you can reduce the payment, or you're thinking about selling or investing, you can reach out here to us at the SD Group and we would love to help. Drop a comment below. What's my options? Sometimes you just got to hit the reset button in life, and that's why this strategy matters. And we'll help you build a plan to be able to help you figure out your next steps. Make sure y'all guys like and subscribe and share this with other homeowners that's also facing the same type of issues that you may have that can also benefit from this video. And we'll definitely see you on the next one. Hopefully y'all guys enjoyed it. Put a whole lot of time and effort into this one. So peace out.